In this lesson, I'm going to be showing you how to buy and sell on margin exchanges. So this is basically full margin trading tutorial. So this is the website ByBit. I already have accounts. If you don't have accounts, all you need to do is email registration or mobile registration, anyone you prefer. If it's email registration, your email, choose a favorable password, confirm referral code. I might leave my referral code in the link below, and then you register. Then you confirm wherever code is sent to you, and then you log in. Let me log in this account. So for the purpose of this course, I already opened an account with the official email, and then that's what we're going to be using. I already deposited some money into it. So this is what ByBit looks like. This is where you want to be trading margin, right? For my profile, this is my profile, Finance Bridge Academy. So I'm going to click on asset. These are all the assets I have. So they have just 5 coins in this exchange. We have BTC, ETH, EOS, XRP, and USDT. And remember what USDT does, it helps you maintain the value of your money. So if you feel a particular coin is going to drop, you have to change it to USDT. Please note that if you feel a particular coin is going to drop in value, change it to USDT, because USDT is equivalent to US dollars. So if you have 10 USDT, it means you have 10 US dollars. So it keeps the value of your token when you feel your token is going to drop. So this is what the exchange looks like. If I want to deposit money, all I need to do is click this place. We already saw that on Binance. You copy the address and then go and paste it wherever you want to send the money from. If you are trying to withdraw, you copy the address you want to send the money to, paste it and send it. Do you understand? So I want to trade. So this is how we trade here. You click on inverse perpetual, and this is what the exchange looks like, right? So this is Bitcoin chart, and in this place you just don't want to be taking orders anyhow, because you know that in margin trading there's liquidation. Your money can be gone forever if you don't manage your risk well. Do you understand? Your money can be gone forever if you don't manage your risk well. Remember, in our margin trading, we talked about liquidation price, we talked about limit order, we talked about position sizing and all that. So, for example, let's say I want to long Bitcoin. You know, the meaning of long means you are buying slash long, sell slash short. So it means when you buy and Bitcoin goes up, you make money. For short position, it means when you sell, if Bitcoin goes down, you make money. If you are selling and Bitcoin goes up, you are going to lose your money. Let's say in this case, I'm going to be risking maximum of 5% on my account, right? So I have $80 account. Can you see my account? I have $80 in this account, and per trade I don't want to risk more than 5%. So 5% of $80 will be $4. So per trade I don't want to be risking more than $4. Do you understand? So let's say I feel Bitcoin is going to drop in price, for instance. So let's say I feel BTC will get to this place, right? So I feel BTC is going to come down to 12,700 from 13,168. So this is my trade. So you know I'm risking 5%, right? And 5% of $80 is $4. So on a trade, I don't want to be losing more than $4. So here's the point. Where do I set my stop loss in this trade? Where I'm going to set my stop loss is a point where I feel the reason why I entered the trade has been invalidated. So where do I feel that this trade has been invalidated? Because I feel Bitcoin is going to drop, right? So let me put this arrow. I feel Bitcoin is going to come down to this area. So I feel Bitcoin is going to drop from this 13,000 to 12,700. So at what point will I say I'm wrong that okay, Bitcoin is not going to drop again, it will continue going up? All I'm going to do is to pick out this resistance. So there's a resistance here, right? So I feel if price start to break above this resistance, if price start to get above it, then this resistance will turn to support, which means price will continue to go up. And it means that if price continue to go up, in my short position will lose money, because if price goes down I will make money, but if price goes up I will lose money. So I will know that if price breaks this resistance, it means price might continue going up, which means I will continue losing money. So my stop loss can just be little above this place. So my stop loss can just be a little above the resistance. So we can just put it a little above the resistance. So my stop loss will be at 13,275. So here is what my position will look like. So I'm going to pick a short position, which is this. This is my entry price. So I feel Bitcoin will get to 12,700, and my stop loss is here at 13,272. So it means that I'm going to be risking 0.97% to make 3.35%. Do you understand? 0.97% to make 3.3%. So I want to make sure that the 0.97% I'm losing here must be equivalent to $4, which is my risk amount. Remember, I don't want to lose more than $4 per trade. So what will be the amount I'm going to put on this trade, in which if my trade gets stopped at this point, I'm only going to lose $4? How are we going to calculate that? Remember, in our course, total equity multiplied by risk percentage. So that would be total equity. Total equity is $80. So total equity is $80 multiplied by what? Multiplied by the risk percentage. The risk percentage is 5%. Remember, I don't want to be risking more than 5% of my total account, and 5% of $80 is $4. So 5% is also 0.05, right? So 5% is basically 5 divided by 100, which is 0.05. So multiply by, that's 80 multiplied by risk percentage. So that's 80 multiplied by 0.05, right? So this is my risk amount. So I don't want to risk more than $4. So right now, divided by, so this total equity times risk has already given us $4. So divided by distance to stop loss from entry. So the distance to stop loss from entry is what? Is 0.7%. So this is where we are entering the trade, and this is where our stop loss is. The distance between that is 0.97%. So what's 0.97%? So 0.97% is basically 0.97 divided by 100, right? So that will give us 0.0097 for this particular calculation, for this distance to stop loss entry, right? So that's for that. So we already got this total equity multiplied by risk percentage, which is 4, divided by 0.0097. So let's calculate that. That will be 4 divided by 0.0097 equals to, so what we are going to put on this trade is $412. Do you understand? So what we are going, our position size for this trade is $412. So we already got our position size. Let's minimize the calculator. So how do we fill the order? For this particular leverage, I told you, please do not use more than 10 times leverage as beginners. Don't use more than 10 times leverage. And you know what leverage is? If you want to trade, if you have $100 and you want to trade with $1,000, it means you are going to use 10 times leverage. If you have $100, you want to trade with $2,000, it means you are going to use times 20 leverage. Do you understand? So right now we don't want to use more than 10 times leverage. Do you understand? So now, because we are using 10 times leverage, what will be the amount of money we are putting on the table? So we are using just we want to enter a trade with 412, right? So we are going to put 412. That's the quantity of the amount we want to put on this trade, which is $412, right? So the order price, when out, where do you want to enter? We want to enter at maybe 13,155, right? So I'm going to click on sell short. If I sell short, it means I'm going to make money if price drops, right? So remember, our stop loss is at 13,272, and our take profit is at 12,705. So all I'm going to do is click on this sell short. My take profit, remember, I feel Bitcoin is going to drop from 13,000 to 12,704. And then stop loss, where I feel my reason for entering the trade is invalidated, will be around 13,272. Remember, that's where our stop loss is. So it's already showing us the last traded price goes up to 13,000, so it will trigger the market stop. It means once the price gets here, it will help you take the loss, because we are shorting. So if price goes up, we are going to lose money, right? But if price goes down, we are going to make money. That's the point of margin trading. You can make money when market is going up, and you can also make money when market is going down. So this is our order price. So it means we are entering the market at 13,155. This is our order value in BTC. So our $412 is worth 0.031 BTC. The order cost, so this is the cost of entering that trade. So the order cost is 0.00317, which is going to be equivalent to about maybe $40, because we are trading with $400, right? We are trading with $412. The amount of money is going to remove from my account is about $40, because we are using times 10 leverage, right? So available balance, this is what I have less. The position leverage is times 10. Remember, I'm using times 10 of my money to take that trade. So times 10 of $40 will give you about $400. Do you understand? So I'm only using $40 to take this trade because I'm using leverage. So I've confirmed the order. This is the order. So it has not filled it yet. So once it fills it, you see it in this position area, right? Once it fills it, you see it in this position area. So that's how it works. So wait for it to fill. So for a long position, all you need to do is let's say you want to buy BTC worth $1,000 and you only have $100, right? And you only have $100. All you need to do is click on 10 times leverage, which is 10 times of what you have that you want to trade with. Then you type in the $1,000 that you want to trade with. Then you click on buy long. You set your stop loss, you sell your take profit, and by the time price gets there, it will help you take that position straight up. Do you understand? So that's how it works. So once the order fills, you will see the amounts. Let me make you even feel. So now the order has filled. So right now we've entered the trade. This is the amount that the trade is worth, which is $412. This is the value in BTC. This is where it's entered the trade. This is my liquidation price. So my liquidation price is 14,534. So this is the leverage. I'm using times 10 leverage, right? So because my trade is worth 412, it means it has taken about $41.4 from my account to take this particular trade. Do you understand? Because I'm using times 10 of my money. So times 10 of this particular amount is 412 with a little bit of charges that they took. So this is my trade now. I'm already losing about 25 cents on this trade, but there's nothing to worry about. I already know that if this trade goes wrong, I'm only going to lose $4 out of my money, and if it goes right, I'm going to make about $15 out of this trade. So that's how it works. This is just a little account. By the time you are depositing about $1,000, you start taking about $25,000 trade, you start taking about $50,000 trade. So that's all for margin trading. So let me close this position. It is just an example of, let's leave the position. If it goes up, it means I will lose $4. If it goes up to my stop loss, it means I will lose $4. If it goes down to my take profit, I will make about $15. So it really makes sense because I'm risking $4 to make $15. So let's even say I lose twice. If I lose twice, I only lose $8, and if I win once, I win $15, which means I'm still ending up with about $7 at the end of the day. So that's the point of risk management. You don't have to win all the time. Traders don't win all the time. Do you understand? It's the risk management that is the most important thing. And never take a trade without calculating your position size. Never take a trade without setting your stop loss. Stop loss is very, very important. That's without stop loss, you are going to lose your account. You are going to blow your account. You are going to get killed in the market. Do you understand? So that will be all for ByBit. That's how you take a trade. If it's a long trade, you make money if market goes up, and if market drops, you lose money. If it's a short trade, it means the market goes down, you make money. The market goes up, you lose money. So the reason why I'm losing money here right now is that I entered at this red, if you can see this red point, I entered at this red point, but because price is going up, because price is above it, that's why I'm already losing about 15 or 26 cents on that trade. Do you understand? But if price starts to come down, means I'm going to start making money. So that's why margin trading is really, really, really good. I won't forget, I'm going to drop definitions of all these things below this video so you can read up on it. So these are the recent trades. This is people buying and selling cryptocurrency. Some people are buying. This is dollar. People are spending 14,000, 28,000, and all that. So right now, you can see because price is dropping, we are now making about 9 cents. So if price continue to drop, at the end of the day, by the time it gets here, we are going to make about $15, which is good. We have just $80 in our account. If we make $15, that's even about 20% of my account, right? 10% would be about $8. Yeah, that would be about 20, close to 20% of my. So that's how you can grow your account. That's how you can take trade. So that will be all for this particular course. So let's log out, and there are some reward orbs. So this is something you might want to check. This reward orb. This is reward orb. This is the way you can claim some reward from the exchange. So for example, when you register for the first time, if you follow ByBit on Twitter, they will give you $5, which is cool. That can help you with charges. If you deposit more than one BTC, I guess, I think they will give you $20. If you deposit, you know, all these things, you can easily claim them. When you use their strategy alert, give you $5. So if you take 10 consecutive trades, they will give you $5, things like that. So that's all. Just play around the website, you get used to it as time goes on. So that will be all for margin trading. I hope you understand this. This is where you want to be trading. This is where you want to be day trading. This is where you want to be swing trading. This is where you can make money on a daily basis. Do you understand? And if you want to buy the physical currencies, if you want to buy Bitcoin itself without margin trading it, without taking margin positions, go to Binance.com and buy the physical coins. if you have made money on this Bybit platform, you can easily withdraw your profits, sell your Bitcoin on Remitano, sell it on Luno for fiat currency, if it's USD, if it's Naira, or anything, any particular currency you want to be using. So that will be all. And at the same time too, there are some times that when you make money on Bybit, you want to send it to Binance. Maybe you want to invest in some altcoin. If you feel some particular altcoin, like we've seen in the previous lesson, we saw that I bought Dogecoin, I bought WRX, so things like that. So you can divert your funds from Bybit into Binance to buy physical currencies. So this has been a long lesson, and we'll see in the next.